Hi, I'm Mal from the Money Study, bringing you another episode of our Take 10 Challenge, number 60, all about cryptocurrencies. There's my disclaimer, facts and figures, information only. This is not advice. Cryptocurrencies been in the news quite a bit since these things first came into being. A lot of misinformation, dare I say, a lot of misunderstanding about how all this works and what is the benefits and pros and cons. Basically, what is a cryptocurrency? It's a currency, obviously. So we can use it for transactions, we can use it for buying physical things and so forth. It's a form of money, but you can't literally touch it. It's not like a coin that we can actually pick up and stick in our back pocket. And it's certainly something not you can sort of carry along and get it deposited into your bank account. It's all done on a ledger, effectively, so we're just keeping track of what we've got, but it's literally a digital in digital format. Now, there are literally thousands of these things now, and I really am talking thousands of these different cryptocurrencies. Probably the better ones, Bitcoin, Ethereum are probably the better known ones, but there certainly are lots of them out there. Some of them certainly will not survive, that is for sure, and a lot of them have gone by the wayside already. But to say that Bitcoin or Ethereum are going to be the ones that will survive and come out the other side as being perhaps the cryptocurrency that everyone's going to use is an unknown. It could be a case that there's a new cryptocurrency to come that's got better features and so forth that it might have better protection for being hacked or something like that, which means that everyone would like to use that one, and all of a sudden these other ones could fall by the wayside. But these ones certainly have withheld all the changes that have gone on of late, and therefore they've sort of survived the storm, dare I say, of the price rises and decreases and ups and downs that cryptocurrencies have had. What's behind a cryptocurrency is what's called a blockchain, and effectively this is the encryption, how the code of our cryptocurrency is made in the first place. I think the actual technology of blockchain is something we're going to find that technology is going to be used in so many other applications, not just with cryptocurrencies. There's going to be other things that are going to use that blockchain technology in other things in the investment world. And so there's going to be big changes going forward. It just comes down to we don't really need to fully understand exactly how these things are made. It's really what is it all about, is whether it's useful for us as an investment purpose. There is generally speaking, only a limited number of digital currency tokens available. So what that means is there's a scarcity, and the ability to make more bitcoins and so forth is becoming harder and harder and harder, taking more energy to do. They're scarcer, and so if there's a limited number, then effectively what it means is that as everyone owns these things, then therefore their scarcity means that the value of them will indeed go up. So it's a bit like gold. There's a limited amount of that stuff. It's harder and harder to get it and dig it out of the ground, and therefore the value of the gold in theory improves. So similar sort of thing with these digital currencies as well. Now the thing is with these is that they're all different. They've got slightly different features and so forth. Therefore their capabilities are different, and depending on what they were designed for in the first place, and of course therefore it also affects the price and so forth. But the fascinating thing is that nearly 1 in 5 Australians actually now own some form of cryptocurrency, which I was surprised at the numbers in that. That was in 2020. Whether that's gone down because of the recent volatility of cryptos or whether it's gone up, I'm not too sure since then. Be interesting to know the statistics from 2024. But to have 1 in 5 is 20% of the population has come on board with these things. Obviously, many of us are just dabbling. I'm dabbling. I've got a little bit of a couple of different cryptocurrencies that I've got just to, yep, I'm in it, and interested to see how it all developed, and took a bit of a punt, and dare I say, it's been quite beneficial for me at this point in time. Now, whether I continue to build to it is something that I'll just have to keep on monitoring. You buy and sell these things basically through a platform, bit similar to buying shares and so forth. And depending on what platforms and you are using, then yep, they can indeed be hacked, and they have been hacked, and people have actually lost their cryptocurrency due to the collapse of some of the platforms and so forth. There's no legal recourse. It's just your money, basically, if these things collapse or there's fraud or something, yep, your money has indeed just sort of disappeared down the gurgler. But there's becoming more and more protection involved with these things, because I think for it to be taken on board by the wider populace, we need to see a lot more protection involved in this. The fact that it's not legal tender means that the protections certainly aren't there like we have with our normal sort of currency. But you can have a digital wallet, and with a digital wallet, effectively you've got all this encryption, huge long password with various different things you can use. So there's all sorts of different formats now. But the advantage of all this cryptocurrency is that it's actually not, it's got nothing to do with any sort of government. The advantage is also the disadvantage in the fact that this is separate from the real world of money and economics. And so the fact that it can be used for transaction is good, but basically it also means that it's more of, at this point in time, a speculation on its value going up. And so the idea is here that if there's some sort of economic catastrophe and real money suffers, that cryptocurrency, because it's separate from all of that, can indeed perhaps hold its value, or indeed even go up in those sort of circumstances. A bit like, in theory, gold and silver can, when there are series of recessions and depressions, in theory, gold can hold its value. Didn't so much in 2008, but there are certainly thoughts that those sort of things can be offsetting when to offset problems in our other investments if in certain of other economic catastrophes and so forth. So it's got its advantages and it's got its disadvantages. People are sort of saying, yes, that it's good for criminals because it can't be traced in theory, so that the transactions can go on. And obviously, you've heard of the scams where people, actually telling you to pay, will unfreeze your computer if you pay a certain amount of money through Bitcoin, because it can't be traced as such. All of that is sort of got advantages also. So not just criminals, but it does come down to the situation that if the governments decide to ever get rid of cash, which I'm sort of always fearful that they will, to have some other currency that the populace can actually use can actually be quite a useful thing. Anyway, I'm not going to get too political, but it is certainly, it's got a place. I think it will survive in some format. Whether it survives in this format, in the way it is at the moment, is, I think, yet to be seen. Even though it's been around for over a decade, in some form or another, it's one of those things that it is early days in this whole cryptocurrency arrangement. Should you invest in cryptocurrency? Well, I think it's got to be a case, it's got to be some money that you can afford to lose. The prices have been certainly volatile. But of course, Bitcoin at the moment is running at, just a few weeks ago was there back towards its all-time high. And because effectively it's valued in the US dollars, it's sort of like as the Australian dollar moves against the US dollar, the value of cryptocurrencies in the Australian dollar are actually going up quite significantly. So it was sort of like hedging the effects of the downturn in the Australian dollar. You don't have to just go out and buy cryptocurrencies as per se. If you want to invest in the world of cryptocurrencies without actually having to buy them yourself. There are now becoming better ways, or perhaps easier ways, to be able to do this. In 2020, Ray's, who we talked about in a previous session, one of their portfolios is now called Sapphire. And in that platform, in that portfolio, not only you get exposure to shares and so forth, you're actually also giving a 5% allocation of your investment to Bitcoin. So you can now find investments that are actually investing in these in Bitcoins and cryptocurrencies for you. So this is sort of just giving you just another way to dip your toe into these types of things. And of course, if you like the idea of ETFs, which we've talked about, and they're becoming more mainstream, then effectively there are now, certainly internationally, there's quite a few. In Australia, there's now the ETFs are starting up where you can buy an ETF that is effectively trading in that cryptocurrency market. And one of the beta shares had their first one there with the code of CRYP, and it tracks what's called the Bitwise Crypto Innovators Index. What a name! But effectively, it's tracking the progress in what's going on in the crypto market. So this ETF doesn't actually buy cryptocurrencies. What the ETF does, rather, it basically buys companies that are engaged in the crypto economy. So they are buying companies that are building the crypto mining equipment, the trading venues, and all the other services that are linked to the crypto world. They buying those companies in theory. So if crypto values go up, the values of those companies would go up. Therefore, the value of the ETF would go up. So you're getting a sort of like a indirect way of accessing the valuations of the crypto world. So it's not a bad way of sort of thinking about, okay, perhaps if I'm not really game to get into the crypto world, I don't really know how to do it. We will do a session on this later on actually how to buy some Bitcoins or buy some cryptocurrencies and talk about it a bit further. This is just a bit of a taster. But if you don't want to do that and you think, okay, I've already got a share portfolio, I've got my trading account, that you think, okay, yeah, a little bit of exposure to this with a small percentage into some of these ETFs, could be something you might want to consider. So it's certainly going to be something to watch. And I'm very keen to see how this all unfolds over time. As I say, I think it's to stay, but in the current format, I think only time will tell. But anyway, we'll find out, and I'll update you as more information comes to hand.